Hello, and welcome to another episode of the PowerLaw Investor. Today is the 6th of June 2025, and as I write this or I create this video, Bitcoin is trading at 104,500 more or less, and Kaspa is just below 8.5 cents. And today, what I want to be talking about is a different approach towards understanding the power law and figuring out how we can make more informed decisions upon these different buy and sell decisions. How can we do it somewhat differently? And this builds upon the last video that I was talking about, in which I was talking about the development of a risk metric, right? And so I wanted to think a little bit about how I can best express this to you guys. But the risk metric it's a quantitative tool or indicator that tells you the current amount of risk or opportunity that we have in Kaspa. So that's the Kaspa Risk Metric. And it helps identify optimal times to buy or sell. It tells you, or it tells us basically, is the asset cheap or expensive based on historical behavior. Okay. So I have developed this risk metric from Kaspa. Originally, the idea was based around this idea of a power law, right? And the power law gives us this ability to look at a current price and follow that particular trend, right? So let's just look at this. I didn't prepare an extra slide for this, but you guys will get the idea. So if you sort of know that Kaspa is, this is all because Kaspa perform. If you know that Kaspa's price is following this trend line, well, you can sort of ride these peaks and valleys, right? And that makes it a very powerful tool. Now with Bitcoin, this does work, and it has a rather long time frame, right? So your cycle length is 4 years, which means every 4 years you end up getting a great chance to buy, and then within that 4-year period you'll also have a great chance to sell, right? So you can do much better than simple buy and hold by looking at these risk metrics, or by looking at the risk metric, which is derived from the power law in this case. Now Kaspa used to follow the power law, but then you can see over the last year, the performance has not been great, has dropped down. And so those of us who believed in the power law, and it was a good assumption that, hey, what's happening in the past will continue to happen in the future, now have to deal with this new reality. And that's when I started thinking about, okay, what are better ways to try and figure out how, what would be good times to buy and sell? Right? And that's when I came up with this risk metric, and I talked about it briefly on my last video. But in essence, this is telling you the amount of risk that you have in a particular asset, in this case for Kaspa. So it's based on figuring out certain trends and backtesting that extensively, and then figuring out, okay, given what I know in this history of this particular asset, what is a way that I can come up with better buy and sell decisions in this buying or holding. And so here you can see is the Kaspa price, right, from Genesis all the way to current, or yesterday's price. It says it's 0.08, right? And you also look at the logarithmic price of that, just because it allows us to see the smaller values more easily. And based on this, I've developed this risk metric. The risk metric is from a 0 to 1 scale. And when it's at 0, it says this is the best time to buy given what we've seen in the past. And when it's 1, it's what is the best time to sell given what we've seen in the past, right? And so in order to see this a little more clearly, I've created this graph that is color-coded. And so this is the price line. Let me turn the color off, right? So this gray line is the price line for Kaspa, right? But when I turn the color by risk on, the price is colored by what sort of risk factor it has. So again, looking at this, the risk factor is based from 0 to 1. 0 is the best time to buy, and it is in blue, and risk at when it's red, closer to 1, is the best time to sell, right? And so you're looking at this, and maybe it'll be a little more easier in the logarithmic trend over here, but you see it goes red over here right at the top and then collapses down to a blue. So the ideal situation here is you buy at this blue, then you sell at this red, and then you buy at this blue, and you sell at this red, buy at this blue, and then sell at this red, right? So the idea is you're trying to ride the curves. Now, this is a real-time risk metric, meaning that it is only using the data available till that particular point. So this one is 2023. So it's only looking at the 5th of September 2023. So it is looking backwards from that point onward. So if we were in 2023 on September 5th right now, this is exactly the reading that we would be getting, a risk of 0.432. It's not influenced. I'm not looking at today and looking all the way backwards and saying, oh, now I've reinterpreted this. It's really an in the moment signal. And so you can see it has some really powerful characteristics, right? If you just look at the last year, even though Kaspa has had this trend all the way down from about 19 cents to about 19 cents to about 8 cents now, right? 9 cents right now. You can just zoom into this and you can see that's what it's actually generating about here, right? So about 8 cents over here. But by looking at the risk metric when it hits its minimal values, that is closer to, if you decided to buy just at 0.1, then you'd be buying Kaspa at about 11 cents. And then if you decided maybe to sell at 0.5, you'd be looking to sell at 16 cents. And then again, you would buy at 9 cents. And then you would be bought a lot more at 6 cents. And then maybe you would have sold it here when it got to about 12 cents over here. And so as you can visually see, this gives you powerful buying opportunities. If you are buying when the risk level is low and you're selling when the risk level is high, right? Let me get back in the frame over here. So the things to be careful about with this sort of risk metric, and having written this myself, I can sort of have a pretty good idea of when it works and when it doesn't work, is one, no risk metric is going to be perfect. There are two big caveats that I would sort of give, right? One is that just because you're getting a low signal over here, the risk level is really low, doesn't mean it can't still go lower in the future, right? This is just based on the data on what we've seen historically till that particular point. So if you do have a 0.1 or near even a 0, you can get a risk metric around 0 over here, right? You can see here that the risk metric is 0. Doesn't mean the price can't go a little bit lower, but generally it's a good buying point, right? And I think we have to understand that you still have to take into account risk management and position sizing, but it's a pretty good buying point given what we've seen. And on the flip side, the times to sell, this is more difficult to call rather than the bottoms, because when these cryptos take off, they really leave behind the history in the dust, right? So you're expecting fantastic returns on that. So in order to handle both of these situations, either it's going to go lower after getting a low risk metric value, or it's going to go higher after risk value. You don't want to be using bulk buy and sell decisions, right? What we really want to be doing is starting a DCA process, maybe starting it with a bigger amount than we would do at if you were just regularly DCAing. So let's say it drops below, it comes down to about 0.2 in the risk metric. You say, okay, normally I would be DCAing in $100. Now I'm going to step that up to 200 or 300. And the closer it gets to 0, the more you step it up, right? That gives us more buying power towards the end. And the fact that we're DCAing alleviates a lot of this issue that, oh, what if it goes down? Well, you're not putting in 100% of your portfolio on the first day or percent of your allocation. You're doing it on a day-by-day basis. Now, does that mean you get to deploy in the size that you would want? If you have, $10,000 that you want to put in, and you decide to DCA only at about, 200 a day, well, you got to wait for 50 days for that to go through, right? And they may not stay in those risk levels for 50 days. So you may not get to deploy the whole chunk. So there's a certain amount of risk management that does have to take place with this sort of thing, and understanding, okay, I'm balancing the fear and greed, right? Which is what the strategy does. But just on visual inspection, and I've run the back tests also, which I'll share the results at a later date, you do get this idea that, hey, this is what we're looking at, what is the lowest buying point and what are good times for us to buy. So right now, if we look at it, the risk metric is about 0.316, okay? So what this is telling us that it could go lower, but it's probably a decent time to start averaging, to start DCAing in, right? And for reference, here's the table that shows all the different risk levels. and where we are in the grand picture, right? So we're about 0.31, just below this over here. But, if you want to wait to a zero point 0.1 risk metric, you would wait until 0.0529. Now, they're close enough to 5 cents, right? And if you're waiting for an absolute zero, that's what it goes down to. So everyone will have to sort of figure out their own unique buying and selling risk metric based on this, right? And of course, the lower you go, the better deal you get, but you might not get the deal. And the higher you go, the better return, better selling price you get. But it may go higher, or it may not. We don't know whether it hits the higher risk metrics. But this at least gives you guys an idea that based on what we've seen historically so far with Kaspa, it's really suggesting that a bottom would be, based on what we've seen so far, around 4.5 cents, right? So now we're about twice that value. So if you think that you could stomach a 50% drop, it's not a bad time to start going in, and we may not get these prices. My personal feeling is I think that we do see some more shocks in the altcoin market. And I do think that we'll get values in the 0.2 to 0.1 range. I don't think we dip much below the zero range at this point, or around the 0 point. It might happen. I think more likely Bitcoin will continue to take off and the altcoins will continue to have some jumps, but then some crashes also. And we likely get 2, maybe 3 opportunities to load up in the future. I can't say that for certainty, and that's why I'm continuing with my DCA program, as I've talked about in other videos. But I will be using these quantitative metrics now that I've developed to increase the DCA at preset intervals. So as the price drops down, I start buying more and more because I have a high degree of confidence that this is looking at all the history so far, right? So just wanted to introduce you guys to this Kaspa Risk Metric. If you have any questions or comments and want some more suggestions, please include them in the comments below. I will be putting up these graphs on my website, PowerLawInvestor.com. So if you guys want to take a look at it more closely, you can go there and take a look at it. Those will be updated semi-regularly, depending on what sort of input I get. So please show your love and support the channel by liking and subscribing and commenting below. That's all for now. Hope this is useful and gives you a little bit of direction in your adventures in Kaspa. And again, this is not financial advice, so do your own research, and this should give you a good idea along the lines of what I'm thinking. So all the best, cheers, and see you on the next one.